Hey guys, this is Kyrill Asatur with Centerfin Capital, and this is our collective weekly for the week ending May 24th, 2024. As always, we like to highlight a handful of things that happened this week as it pertains to markets and investing that we thought were interesting. This week, we'll discuss two stocks and the earnings reactions that they had this week and what that tells us about the market. Then we'll go into some crypto news, and there was some big news around Ethereum, and we'll discuss what that means and our views on that. And then last but not least, we'll discuss the latest escalation in China and Taiwan and the situation and how that's developing over there. The two earnings we wanted to highlight, earnings were mostly done last week, but we had some notable earnings this week. And we think it tells an interesting story about the market and how stocks are performing in this current environment. This week we had Target reporting earnings, and they reported their fourth quarter of same-store sales decline. So they reported a 3.7% same-store sale decline for the quarter. This is following 3 quarters of declines between 5 and 4% in the prior 3 quarters. Obviously, Target is not managing in this retail environment very well. It doesn't tell us that the consumer is weak. It just tells us that Target is not executing well in this environment. And with the consumer ever changing in their trends and behaviors, these retailers really need to be on top of what's going on. And we think that this kind of shows that Target has not hit the mark, no pun intended, in terms of how they're executing in the current environment. The stock was down significantly after the news. Again, this is not an indication that the consumer is weak, although it's obviously a read-through to that, because Walmart and Costco both reported strong same-store sales growth, Walmart last week and Costco this week. And contra to that, NVIDIA, which is actually the biggest darling stock of the last couple of years, reported earnings that again blew away expectations. They reported revenues of $26 billion, which were up from $7 billion in this quarter last year. They basically blew away all revenue and earnings expectations. Yet again, this is their 5th quarter of really outperforming any expectations. We think this is a good indication or kind of the story around the ever-changing economy from atoms to bits, right? We have been moving and we continue to move into a digital age. And the economy is benefiting from companies like NVIDIA, which is obviously crucial for this latest development in AI technology. NVIDIA stock is now up 100% for the year, and Target stock after this move is basically flat on the year. We think it tells us a couple of things about the stock market and how to think about it in the current environment. First and foremost, it speaks to a stock picker's market, right? It's no longer the case that all stocks go up at the same time. Obviously, NVIDIA is in a hot sector of the economy right now, and it's benefiting from that. And Target is in a tough sector of the economy, but still, it's underperforming their competitors. And there's an opportunity to pick stocks and pick winners and losers. It also highlights the fact that the concentration of performance of the broader stock market, and let's use the S&P 500 as a commonly used stock market indicator in the US, is very high. It's very high by historical standards. Credit to Jim Bianco, who put out a chart this morning on Twitter that showed that NVIDIA represents about almost 40% of this year's return of the stock market. One stock alone represents 40% of the return of the stock market. And if you combine that with Microsoft, Amazon, and Meta, we're talking over 54% of the stock market's return from 4 stocks. And this follows the stock market last year, which had a strong move, but the top 10 stocks represented roughly 20% of the 25 or so percent return for the stock market last year. Again, the performance of the stock market continues to be very concentrated in the biggest companies and very few companies. That's generally not a healthy market. We either need to see participation from other parts of the stock market in smaller cap stocks, smaller medium cap stocks, or this market is going to struggle to continue to perform. It also leads us to the point that we've been making over the last couple of years that the passive strategy of just buying the stock market, so to speak, which has worked well post-financial crisis, may not work in this next decade because it's not likely that you're going to have a $2.5 trillion company like NVIDIA go up another 10x from here. That would make it a $25 trillion company. That would be very hard. Just a couple of read-throughs from earnings this week and the stock performance related to those earnings, we think tells a good story about the kind of market we're in and how to navigate that. And again, we think it points to the passive investing approach not really working in this environment and really being a stock picker's market, being able to choose the sectors and the underlying companies that are going to benefit in this market environment. Next up, we had some news in the crypto space this week. The biggest news was announced on Thursday where the SEC in an about face, it was reported they approved the trading of Ethereum ETFs, which were widely expected to not be approved. Now, we need to clarify that the SEC actually didn't approve the trading of the ETFs, which is what is being reported. They didn't approve the actual ETFs themselves. They just approved the exchanges to be able to trade them. Now they will need to go in and approve the actual S1s, which are the filings with the SEC that the asset managers have made, BlackRock, Van Eck, and others, to actually make those tradable ETFs. So it's obviously a step in the right direction, but it was a real change in tone from the SEC on something that most people didn't expect to happen anytime soon. So obviously a positive development. The other thing that is notable is that the House passed what is referred to as the FIT21 bill this week with support from the Democrats. And that bill is trying to basically move the regulatory framework for crypto assets from the SEC to the CFTC. The SEC has continued to resist developing a framework for cryptocurrency assets and try to fit them into the securities framework that has existed for decades. And Congress has acted, which we have discussed before, is probably a necessary thing in this case. And they're trying to kick over the regulations to the CFTC, which has been a little bit more open-minded around this space. Again, we think the Ethereum ETF is an interesting development. Ethereum is a very different asset than Bitcoin. As we've discussed before, Ethereum is a smart contract platform. So it's really a network where developers can build certain applications on top of it. It's got a very different use case than Bitcoin, but we think it's an important development, and it'll be interesting to see how this bill plays out in the Senate in the coming weeks and months. The last thing we'd like to highlight is the latest developments from China and the hostility towards Taiwan. Taiwan elected a new president just 3 days ago, and 3 days later, China basically encircled the whole island of Taiwan with their military. They sent additional ships. They've been doing military exercises in and around Taiwan for years now. They sent additional military ships to the region and basically encircled the whole island. That gave worry to some in the foreign policy world that they were setting up for a blockade and the beginning of a potential invasion. As we've discussed, geopolitical risk always exists, but there are times when it's heightened over other times. And this is one of those times where China might act sooner than they maybe anticipated, maybe getting ahead of the U.S. election with the uncertainty around who the new president is going to be. This power move that they made overnight is certainly something of note, and it's not really being picked up by the mainstream media. So we thought we'd bring it to your attention because almost certainly if China moves on Taiwan, the U.S. is going to get involved, and it's going to create additional uncertainty in the world. And as we've discussed many times in the past, markets do not like uncertainty. So those are the 3 highlights for you guys. As always, let us know if you want to discuss any of this in more detail. We're open to your conversations, and drop us a note if you'd like for us to discuss anything in the future notes. Have a great weekend, everybody.